Ladies and gentlemen, good day and welcome to the Emami Limited Q4FY22 conference call hosted by IIFL Securities Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Percy Patanki from IIFL Securities. Thank you and over to you.
Hi, good evening everyone and welcome to the Emami's 4Q conference call. I have with us from the management Mr. Mohan Goenka, Director, Mr. Rajesh Sharma, President Finance and IR, Mr. Vivek Dheer, CEO, International Business, Mr. Vinod Rao, President Sales, and Mr. Gulraj Bhatia, President Healthcare Division. So without further ado, I'd like to hand over to Mr. Goenka for his initial remarks. Over to you, sir.
Thank you, Percy. A very good evening, friends. I welcome you all to this conference call on Emami's result for the fourth quarter and year ended 31st March 2022. During the quarter, consumption trends remained subdued amidst weak sentiments and steep inflation. The geopolitical conflicts aggravated the raw material inflation scenario as crude oil prices spiked up and persistent inflation continued to hurt consumer wallets across rural and urban markets, leading to a slowdown in sales. Despite the challenging macro environment, we have been able to post a resilient performance during the quarter with consolidated revenues at 770 crores, growing by 5% in Q4, which translates into a 2-year CAGR of 20%. Our India business grew by 4% over previous year, that is a 2-year CAGR of 22% with flat volume growth over previous year. Our major brands like pain management grew by 9%, healthcare range grew by 4%, male grooming range grew by 4%, and 7 oils in 1 grew by 8% during the quarter. While Navratna posted flat growth during the quarter, it grew by 13% on a 2-year and by 4% on a 3-year CAGR basis. Kesh King, however, declined by 7% over previous year, but grew by 16% on a 2-year CAGR basis, and Boro Plus declined by 18% during the quarter. In this quarter, modern trade grew by 9%. E-com continued its robust run growth by 90% over previous year. In Q4 22, the salience of e-com channel has increased to 7.1% of domestic revenues, and modern trade contributed to 8.4% of the domestic revenues, increasing its salience by 60 basis points as well. CSD revenues grew by 32% during the quarter. Our distribution initiatives continue to progress with additional 8,000 rural towns being added in this quarter to Project Khoj, taking the total tally to 40,000 rural towns. Revenues and presence in standalone modern trade outlets increased with coverage expanding to 40 cities and more than 3,300 outlets. The company also activated around 32,000 additional outlets for its healthcare products by focusing on Ayurvedic bhandars and chemist outlets, taking the total tally to 1.1 lakh outlets. Coming to our international business, our sales have grown by 8% during the quarter on a high base of 28%. However, if we exclude the sales from CIS region, which was impacted due to the geopolitical issues, our international business grew strongly by 17%. Key geographies like Bangladesh and UAE performed well during the quarter. If I look at the profitability numbers this quarter, I believe we have posted decent set of numbers despite strong inflationary pressure and a high base of previous year. Gross margins at 62.4% contracted by just 30 basis points on account of judicious price hikes and strategic procurement. EBITDA at 164 crores grew by 1%, and profit after tax at 104 crores declined by 15% on account of one-off forex loss of 5.1 crores and lower other income. However, PAT at 356 crores grew by 4.1 times over previous year on account of recognition of MAT credit entitlement amounting to 288 crores in this quarter. In FY22, consolidated revenues at 3,192 crores grew by 11%. EBITDA at 952 crores grew by 8%. Profit after tax at 703 crores grew by 23%, and PAT at 839 crores grew by 85%. I am happy to share that we have posted a 3-year profit before tax CAGR of 20% in FY22, which is one of the highest in the industry since the COVID period, despite the ongoing challenges. In the full year, our major brands like pain management range grew by 18%, Kesh King grew by 11%, healthcare range grew by 9%, male grooming range grew by 16%, Boro Plus and Navratna grew by 5% each, and 7 Oils in 1 grew by 29%. I am happy to share that we have not only managed to increase or maintain our market leadership positions, but also increased our household penetration in most of the categories. As we are all aware that the business environment since early 2020 has been facing many challenges which affected consumer behavior. While the industry has had an uphill task of mitigating these challenges by smart adoption of new ways of doing business, including digitization, it keeps facing new challenges in the form of geopolitical issues and steep inflation in global commodities, which leading to price hikes by companies to tide over the cost push. This, we believe, has led to plummeting consumer sentiments across rural and urban, affecting the industry. However, we believe that there is sunshine behind every dark cloud, and thus we are optimistic of witnessing an upward curve in the consumer sentiment in the near future. We have always believed in growing both organically and inorganically and keep investing in businesses and brands where we see synergies with our current businesses and scope of growth. In March, we acquired the reputed Dermicool brand of prickly heat powders and also invested in Two Native F&B, a new age company marketing nutrition products. We do believe both of these brands will pay rich dividends in times to come. At the same time, we will continue to invest in our existing power brands, as we do believe there is much headroom for growth. With this brief, I now open the floor for Q&A. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. We have the first question from the line of Abneesh Roy from Edelweiss. Please go ahead.
Yeah, thanks. Thanks for the opportunity. My first question is on the gross margin pressure in Q1. Do you see significant pressure in Q1 given we have seen widespread inflation? In Q3 call, you had said in Q4 you don't expect significant pressure, which you have delivered, only 30 bits gross margin compression, which is quite decent performance. But in Q1, how do you see? Because always lag is there in terms of impact.
Right. So, Abneesh, you are right. So, now that the materials we had, most of it has been consumed in Q4. So, we have to buy it at new prices, what is prevalent in the markets now. What looks like as of now that there should be a pressure of about 200 basis points in quarter one.
And that's without you taking price hike, or that's post your price hike, if any, you're already done?
No, price hikes have all been factored in. Post the price hikes, that would be the kind of contraction.
Sure. And second question is on the rural demand, when do you see recovery? Because we are seeing NREGS job demand going down, which is a good trend. That's a lead indicator. Plus good monsoon, high crop prices. What are you picking up from on ground? Is it a H2 recovery, or you think in Q2 some recovery can start?
So as of now, Avnish, markets are still subdued as far as rural demand is concerned. We are seeing some pressure. But at the same time, what numbers we are seeing today, that there is good traction as far as our summer portfolio is concerned. Where we are seeing some concern is on the very high base of our paint portfolio. So it would be a good play as far as our portfolio is concerned. So, but overall, the demand sentiment still is low. We are very optimistic that the second quarter there should be some bounce back for sure.
Sure. And last quick question: your volumes are flat, and you did say currently demand situation is challenging for the entire FMCG sector. In light of that, 10% higher advertising spend is something which is not very common. Most FMCG companies have cut down ad volumes, ad spend sharply. So why you want to spend so much higher when volume growth is flattish?
So it is very difficult, Avnish, that to cut expenditure just like that, because there were some new launches that we had done. On account of that, we had to spend some amount of money. Also, some amount of money goes into our Jandu care. So that's an ongoing cost which we have to entail anyways. So looking at overall scenario, I think the costs have gone up. But if you see on a yearly basis, we have maintained our numbers. We haven't increased our advertising significantly.
Okay. Okay, Mohanji, that's all from my side. Thanks a lot.
Thank you, Avnish.
Thank you. We have the next question from the line of Shirish Pardeshi from Centrum Capital. Please go ahead.
Hi, Mohanji, Rajesh and team. Thanks for the opportunity. Sir, I've got three questions. When I looked at your presentation, Case King range has declined 7%, and on 2 years CAGR it has grown 16%. What has exactly happened in this product? Because last time when we had a call, you said that Case King is now running good momentum. So maybe you can give some qualitative comments.
No, so Case King, Shirish, you are right. So we are very bullish on the Case King range, and I think we have delivered a good set of numbers. If you see on a 2-year CAGR, we have grown at 16%. Okay, and this for the whole year we have grown at 11%. So we were sitting on a very high base on quarter 4. I think our growth was almost 40% or something. So on that we have declined, but I don't see any challenge as far as Case King range is concerned.
So it's not a product issue or offtake issue. It is more to do with the high base.
Yeah, it is. The base was very high last year in this quarter.
Okay. Similar question on Navratna. Despite the strong summer, we have managed to get a flat growth. So what is exactly happening in the Navratna product?
Navratna has bounced back. Last 2 years, you know, in the peak season we had COVID, so of course that is the effect. But we have seen good set of numbers coming in April month. So I think Navratna would deliver quite significantly well. I'm not worried about Navratna. The summer season is also good this time, so we should get good set of numbers.
Okay. Okay. And my question on international, despite these all challenges, the growth is okay. But if we have to factor in last 2-3 years, we are trying to do a lot of changes. Barring apart CS country, you think we can manage a double-digit growth?
Very much. So Vivek is here on the call. Vivek would be able to answer your query.
Sure.
Hello, I'm Vivek this side. So I think we are seeing a good growth momentum from August onwards. So Russia-Ukraine situation was unexpected, which led to a lower number. Despite that, we could grow by 8%. And the next quarter onward, we should have a double-digit growth, despite the situation which we are facing.
Okay. Mohanji, just last one question. You said that 200 basis point margin decline after considering price increases, correct?
Right. Absolutely.
And how much price increases we have taken so far? Because last quarter we were saying 3.5% we have taken. Is any new price increase which has gone?
So we have taken almost 4.5% price increase, Rish.
Okay.
Yeah.
Okay, sir. Thank you, and all the best.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question from the line of Prakash Kapadia from Anived Portfolio Managers. Please go ahead.
Companies, they have been witnessing, market share gains in most of the product portfolios. Now, given, our power brand portfolio, we are slightly niche and, slightly high market share. So how is, our market share trajectory happening? Because, smaller companies face challenges in inflationary times. Or, we are high in market share, so, the difference is not too large in this kind of an environment for us. If you could give some light on that. And, you also mentioned about, downtrading in rural markets. So, what could be the LUP contribution? Has that seen a major change? And, also if you could comment on urban kind of markets, what are we seeing? Are we seeing lower LUPs in urban markets also? What are we trying to do, to bridge the gap in these inflationary times? Are we, planning some bridge mid-level SKU products? What is happening on the urban side? If you could give some color, that will be helpful.
So, Prakashji, as far as market shares are concerned, you are right. We have increased our market share in almost all the portfolios, in all the categories that we operate in. Of course, last 2 years were very, very challenging. Despite of that, we have gained market share. But now we would have to see how we can grow these markets. And we have taken an aggressive stance because the markets are now, in the sense, opened. Though there is inflation, all of us know the story, but still we are going aggressive as far as our advertising is concerned. Because after 2 years of lull markets, we need to invest aggressively on our summer portfolio, which is very key for our growth. So we are confident that in some of our portfolios, we should be able to grow the market as a whole, other than just the paint portfolio, which was driven due to COVID.
COVID, right.
Yeah. So that would definitely see a decline. Other than that, all the other categories, whether it is Kesh King, Navratna Oil, Fair and Handsome, or 7 Oils in One, or the other categories would see a growth. So that is one.
Mohanji, essentially is, because market share is decent and high for us, so unless and until, we as, leaders don't try and expand the market, growth could become difficult. That is why the aggression, obviously, given what we've seen last 2 summers because of COVID. Is that a fair?
Yes, absolutely. So we would be quite aggressive in our summer portfolio, as far as advertising and our promotions are concerned. Okay.
Right.
So that way the market should grow. And we have seen good numbers coming in the month of April because it was extreme summers this time. Okay. And secondly, yes, there is downtrading happening across the markets, whether it is urban, rural. Luckily, Emami has, small LUPs, which contributes to almost 23-24% of our total business. So there we don't have gaps as far as LUP is concerned. I have not seen a significant growth in LUPs due to this inflation, but yes, because we have the LUPs, we are been able to service all kind of markets, urban and rural.
Okay. And on the urban side, are we seeing some, lower packs starting to move, or are we trying to, put in some bridge packs to meet demand in replacement of larger packs or something?
We already have, Prakashji, all those bridge packs that you have been hearing in the market. So we have price points from 1 rupee, 5 rupee, 10 rupee to, there is no gap there, honestly.
Okay. And, we've seen a stake increase last year in Brill Care, Helios Lifestyle. So, what kind of size are these companies as of now? What are we, thinking of scale in the next 2, 3, 4 years? If you could give some direction into some of these companies. How are they doing? What is our thought process?
Well, Helios is doing pretty well, and the other ones, Brill Science is little smaller compared to Helios, but Helios is doing pretty well. And in coming a couple of years, I think that should continue doing well and increase its revenues.
Okay. Some aspirational number, some numbers if you can, or direction you can share, Rajesh.
So currently this year, I think it is roughly around 80 crores kind of top line, and continue to do well.
And from April 1, Dermicool consolidation happened, right? For us?
Right. So we acquired almost at the end of the March last year. So no revenues came last year. So our revenues have started flowing in from this year. From April, yeah.
Fine. Thanks. All the best. I'll join back if I have more questions.
Thank you.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question from the line of Manoj Menon from ICICI Securities. Please go ahead.
Hi team, I got a few questions, but if it is constraining the folks in the queue, please let me know, then I'll come back. So I'll take one at a time, sir. The first, Mohanji and Rajeshji, typically in the past, Emami, has worked with a lot of consultants with the medium long-term thought processes. If you could highlight a few projects which you're working on currently and what's the brief and where we are. So that's question number 1. Thank you.
So, Manojji, right now, we don't have consultants working with us. By and large, the projects that were there, we are continuing with some of them, but those projects are already completed. But other than the distribution, which is Project Khoj, which is an ongoing project for the last 1 year, that is continuing. But other than that, there are no external consultants on board.
Understood, sir. Understood. Also, one observation was, when you have a very strong independent director, which I've seen in the past actually. Plus, so I need to reframe my question actually. So it's only Project Khoj and there is nothing which is basically in the pipeline currently, right? Whether it is an external consultant or whether it is something else which you're working on. What I'm trying to understand was basically, sir, look, markets may be soft today, and maybe in 3 months' time, 6 months' time, commodities can change and there will be different scenarios. So what I'm trying to understand here is, the things which you are working on your own, leaving out the external factors.
Yeah, absolutely, Manojji. So we have identified some growth areas internally, which are those growth areas, and projects which were already being handed over by the BCG and others. Those are already, they have given their reports and we are implementing those strategies. So we don't need them right now, honestly. But the implementation would happen now in some of the projects that we completed last year. So, yeah, so as I said, there are growth opportunities in some of our existing brands, very clearly Navratna, in fact, all the summer portfolio. Fair and Handsome, it's a complete relaunch. We see a good amount of growth coming in. 7 Oils in One, we have a strong strategy. for growth. We are investing good amount of money. Similarly, on the healthcare range, Gulraj is here. He can throw some light on the healthcare range. How are we growing there? So we have earmarked growth strategies for some of our categories, and we would be working on that direction for this year.
Sure. Understood, sir. Secondly, sir, one thing on Kesh King, basically the question is like this, actually. So is there a category relevance, aspect there which is constraining the growth here? Because let me take a step back, right? So allow me, again, I'm just repeating this. If I need to come back in the queue, please let me know. If I think about a brand like Paperboard, for example, right? So there was an expectation that there is a certain market, but then what we realized is that this market is available at a certain price. So when I look at again whether it's Indulekha, whether it is Kesh King, whether it is the quote unquote problem solution, reasonably higher priced, product from a consumer point of view, is it a segment issue, industry issue from a sustainable, low volatile growth? Given the assumption few years back was that this is a great opportunity. So it's not about the quarter. I just wanted to hear about your prognosis and it just that KK has been, with you for a long period of time, and you had your learning curve, etc. on this. How do we think about Kesh King opportunity in the medium term? What do you realistically see, and what are the actionables from your side, sir?
So firstly, Manoj, I think we still believe that Kesh King is a great opportunity. There is no reason why the brand should not grow. And as I said that the brand has grown. If you see on a 2-year CAGR basis, it has grown at 17%. This quarter it declined on a high base of 45% growth. So don't go by this quarter it has declined by 7%. We have taken on the competition very, very strongly, whether it is Indulekha or whether it is Kesh Kanti. Of course, at this point of time, any costly products is going through a tough time. So it's not just about Kesh King. Every product which is a premium price product is not selling so well. So we also have to bear that in mind. But as far as hair fall problems are concerned or hair growth is concerned, that is very, very relevant. And I think Kesh King delivers on that promise. So on a long-term horizon, it has potential to grow definitely at a double-digit growth. I'm not at all worried about 1 or 2 quarters here and there. On a 2-year, we have grown at 16%. It's not a bad number.
Fair point, sir. Got it. No, very fair point. Because now my only, honestly, my observation as an analyst was, let's say, for example, a lever stop talking about Indulekha. You got to take it an offline question rather than a call.
Which is fine for us, but it even gives us more room for growth.
No, that's a fair point actually. Because my worry was, or rather the question was about the category relevance, and you answered that. Thank you. So the third thing was about cooling oil. South as a vector for growth, has been there, for cooling oil. I know that you have a reasonable presence in such a built in the last decade. But any specific comments here? So when I say South, for example, correct me if I'm wrong, on basic understanding. In my understanding, you have a very good, presence in Andhra. You got opportunity to, add to what you have done the good work in Tamil Nadu. But then there are other parts, such as Karnataka, Kerala, kind of. So the South has a vector for growth in, in the Navaratna part of it, given that it is also part of the world where, probably 10 out of 12 months is summer.
So, Roji, you are right. Unfortunately, South has many other hair oils, which sells pretty well. So there is, of course, a challenge in the South compared to the North or the West markets. You are right. We invested huge amounts of money in Andhra, Tamil Nadu and Karnataka, and that's why we are seeing the numbers coming in from South India. But if you ask me, I think the potential still lies more in the North and the Western regions than so much in the South regions. Because to change the habits, it takes time and it is very expensive. But despite of that, we would keep on investing in southern markets, in all the 3 markets, not so much in Kerala, but Andhra, Telangana and Tamil Nadu and Karnataka.
Got it. So I'll take this offline because if you follow up, so which gains on this actually. Sir, lastly, you have done in a few, I would say, acquisitions, investments in startups. Just trying to understand the relationships with the startups. Let's say, on how do you work with them? What level of engagement, let's say you personally will have with them or the team will have with them, et cetera, et cetera.
No, so, of course, we have monthly meetings with them. They share all their plans, which is jointly approved by us. Whatever help we need from them or they need from us, it's an ongoing process. Now, whether it is Helios or it is Brillare. Brillare is now part of, it's a subsidiary of Emami. And Helios also, we have got a significant share now. So both these companies, we are actively involved. Other investments also, we have invested keeping long term in mind because, the markets are moving to a new direction, which is very difficult for Emami to do that on their own. So there is good amount of learning, what we have got from these startups. And if you would have seen, Manoj, over the last 3-4 years, our presence on online, which you were always doubting, all of you were doubting, now it has reached to almost 7.5%. So a modern trade plus e-com is now 15%. On our portfolio, I don't think it's a bad number. Okay. So there is definite learning from these startups and which we implement in our existing portfolios.
Understood, sir. So if I may push this a little bit, actually, whatever you could talk in a public domain, so when you talk about learnings, for example, the modern trade, that's an exceptionally, good outcome which we have seen actually, and that too in times like last couple of years, for example, when modern trade could have possibly got even disrupted, right? So I think on a normalized basis, possibly you're nudging probably double digits or even more. But then from a learning point of view, if you can help us understand at a team level, is it on the speed to market or let's say concept to launch, or is it to do with let's say what another company told me, an unlisted personal care company told me recently about, let's say, something like democratization of marketing insights, or is it an R&D aspect there, or is it just a simple risk taking aspect? So when you say learning, for example, functionality wise, let's say, if you could help us understand, where Emami is today versus, let's say, 2 years back on what you would have actually gained from, let's say, these investments, sir.
So I would ask Vinod, because Vinod heads this division. Vinod, if you can throw some light on the e-com.
Sure. So I'll answer it in both for e-com and modern trade. And I think the key learnings that we take is, like you rightly said, the democratization of the investment. What investment works, what are the kind of areas we need to invest which deliver results and growth. Two is on the pack and format sense. So we were in a portfolio, we made a lot of choices and we made a lot of decisions regarding the large packs, combos. These are becoming significant growth drivers for us, and they've in share terms they've increased dramatically, which is helping us driving growth. The other area is the overall in-store investments. I think there is a lot of learning that we take from these companies as to what is the kind of nature of investments we need to make in modern trade formats. And these have driven phenomenal results for us. 40% offtake growth in stores where we have invested in, and we're using the plank of a complete Ayurveda care, and which is helping us to do an entire Emami brand block in store, which has driven growth for us. So a lot of critical investments made with the kind of JBPs, the joint business plans which we do with accounts. We've become preferred suppliers in many of the large accounts, and we share the table with the likes of Colgate and such companies. A lot of top-to-top engagements. I think these are all learnings which has helped us drive growth both in e-com and modern trade.
Sure. Thank you so much, Mohanji, Vinodji, and Rajesh. Thank you. Appreciate it. I'll come back in the queue.
Thank you, Manoj.
Thank you. We have the next question from the line of Kunal Shah from Jefferies. Please go ahead.
Hello. Thank you for the opportunity. I have a couple of questions. The first one is on the summer portfolio. So you mentioned April has done well So when you say that, do you also include Dermicool and any integration issues or that you have faced in the initial few months, given that this April and May are 90% of the portfolio?
No, so this excludes Dermicool. Whatever I'm saying is on our existing portfolio. And this integration has not happened, because presently they are only selling from their own network. The numbers would add on our balance sheet, but the arrangement is that they will distribute this year. It will come to us from next year.
Got it. But any challenges that you are seeing in this arrangement which impacts revenues for this year, or it should not be an issue?
No, I don't think there would be an issue. If you would have taken it, then there would have been much larger issues because it was peak season, and those changes would have much larger impact.
Got it. My second question was a clarification. So you said 200 bips impact in 1Q. Is that the gross margins or are those operating margins?
Gross margins.
Got it. And finally, I have a couple of bookkeeping questions. So what should be the amortization of brands that should happen in the coming FY23 and thereon, given we have also acquired Dermicool now?
So roughly the next year the amortization should be anywhere around 120 crores kind of. Because
okay,
yeah, and because for the first quarter June, Case King would also get amortized, and post that only Dermicool and the other smaller brands would be getting amortized.
Understood. And finally, what should be the expected tax rate for next year?
We would be paying MAT only next year also, so roughly 18 to 19% overall tax rate, but then we also have to see now how much MAT credit we generate next year, because from this quarter onwards we have started recognizing the MAT credit, so I think that should bring down some 1 or 2% tax rate lower. We should be able to generate MAT credit next year as well.
Understood. That's all from my side. Thank you.
Thank you.
Thank you. We have the next question from the line of Percy Patanki. Please go ahead.
Hi, sir. You mentioned that price increases that you have taken are about 4.5%. Just wanted to understand, if I look at the FMCG players, listed FMCG players, and we are hearing the conference calls, etc., looking at the numbers, this is one of the lowest price increases across FMCG players at 4.5%. So do you think there is leeway to take more price increases, especially in light of the fact that there is a cost push inflation and there is a pressure on your margin? And if you do take it, you would not be out of bounds compared to the industry average.
So, Percy, it all depends on the category that you operate in. I think we have been aggressive. You also have to recognize that our 23-24% portfolio comes from LUPs, where we don't take any price increase. So on an overall basis, on the packs that we have taken price increase goes in the range of about 7 to 8%. So this is the max, honestly, at this point of time we can pass on.
Sir, on LUP you do not do a grammage rationalization?
No, we have already done that in the past, Percy. There is not much scope, honestly, on grammage reduction.
Okay. So given that input costs are sort of have picked up in the last few months and you are unwilling to take price increases, supposing they stabilize at the current level, then how do you recover the lost margin?
If prices first of all have stabilized now, so they are not going up. Okay. And in the long term, see, honestly, this is not the kind of price increase we normally take. And once the market stabilizes and we see a downtrend, you would see again we bounce back to our original, 72% gross margin levels. So we have seen that in the past also when prices of menthol had really accelerated and we increased our prices, when they came down, it straight away added to our margins. So I think it is just a matter of about 2 quarters, where we would see this kind of a decline. Then you will see a benefit coming in from the third and the fourth quarter.
Understood. So second question is, I just wanted your insight on how you are looking at consumer behavior in the hair oils market particularly. So what we have seen is hair oils market itself is not growing. I'm talking about value-added hair oils as a whole, everything except pure coconut oil. So over the last 3 years, if I look at the CAGR for Q4 for Dabur as well as Marico, it is 0 to 1% kind of 3-year CAGR. So obviously this is a category which the consumer right now is sort of deprioritizing, given that there is inflation and he has to cut somewhere, so he's cutting personal care, and hair care is one of the parts of the personal care. But my question was, how do you see this playing out across the different sub-segments of hair oil? So there is a low-cost amla, then there is the mid-cost oil like almond, etc., and then there is the premium oils. So where do you see the consumer really having the biggest pressure? In which of these 3 segments? And is there any up-trading, down-trading, etc., which is happening? Or is it that the premium customer is someone who has a higher income level and therefore is not worried about little bit of food inflation, etc., because he has that much of buffer of savings and he is not cutting his expenditure? That's what we saw, for example, in Hindustan Lever, where their mass market brands did not perform well, but their premium brands have actually performed well. So any thoughts on this, sir?
So Percy, firstly, we have 3 hair oils. One is Navratna, one is Kesh King, and one is 7 oils in one. All 3 operate differently in different markets. Okay, we have different consumers. Firstly, none of these brands, have performed badly. If you look at a 3-year CAGR, okay, you can get the details from Rajesh, whatever details you want. Other than Navratna, which was one-off because of the COVID scenario. I also said that April month has been good when we have seen the extreme summer months. Same trend is continuing in the month of May also for Navratna oil. And same is the trend for 7 oils in one, where we are seeing significant growth coming in continuously quarter-on-quarter basis. Only, of course, there is some challenge on Kesh King because of the pricing, which we are facing recently, which is very, very new. On a 2-year year, I have continuously been saying we have grown at 16% CAGR also on Kesh King. But yes, last 2-3 months, because of this inflation, there is some pressure on the Kesh King, which I am very, very confident. Once, market normalizes, we would also see growth in Kesh King. So there is no structural issue as far as oils are concerned, or at least our portfolio of oils are concerned.
Right, sir. That's all.
Because numbers ही तो बोलेगा ना. Ultimately, numbers will speak.
Sure. Understood.
Yeah.
Thank you. We have the next question from the line of Kaustup Pavaskar from Sharekhan. Please go ahead.
Yeah. Good evening, sir. Thanks for giving me the opportunity. So my question is on new launches. FY22, we have seen that it was kind of earlier expect for some of the launches in the healthcare category or immunity boosting products. So FY23, how do we look at from the world of new launches, and which of the categories we would be targeting if there are any launches which you are planning to do?
So Kaustup, last year, yes, there were a couple of new launches that we did. Almost contribution from new launches were in the range of about 2%, so which included some of the healthcare portfolios also. Gulraj is also here, who looks after our healthcare portfolio. He is the CEO of the healthcare division. So Gulraj, if you can throw some light what we are doing on Jandu Care and what growth you see in the midterm and long term.
Right, sir. So, from a healthcare perspective, as you rightly said, there have been a few launches which we've done, and many of those have done well, such as the health juice range of Amla, Aloe Vera, Giloy Tulsi, Karela Jamun. So they've ramped up pretty well. We also had the launch of the Ayurvedic cough syrup, which has done very well. Of course, it was aided by the Omicron issue which happened last year. Even in the digital ecosystem on our D2C platform, we've done a number of launches which are the first of its kind in terms of the online space. We are investing behind them, and we are seeing good green offshoots on those. Obviously, they will take some time to ramp up because we are going on a test and learn basis to see how much we should invest, how much will be the return. And from an overall perspective, very clearly, we do see upsides happening on some of the categories where we have a relatively low market share, such as Chyawanprash, such as the laxative segment, even the generics and ethicals business. We have been growing much better than what our competition is doing. So we are going to be more aggressive in areas where we can grow the market share. And on brands like Pancharishta, ACG1, where we are the leaders, we will obviously work towards increasing the consumer penetration to grow our top line in these brands. Right, sir. So, in hair oil, are you looking for any launch? Because we have seen Bajaj Consumer Care in the last couple of quarters, they have done a slew of launches. And also they have done launches on the digital platform. So, since you are also focusing on expanding your digital portfolio, so any thought process on that, whether you want to, launch any specific product in the hair oil category, or where you want to penetrate deep in some of the markets where the penetration levels are low?
So Costa, on hair oil, as I said, we have three categories: cooling oil, 7 oils in one, and Kesh King. Right now, we would focus on these products primarily to see that they grow. But apart from this, if there would be any launches, it would be mostly on the e-com platform, which would be premium offerings.
Okay. And with the accumulation of Dermicool, now how much is the summer portfolio contributing to your overall revenues?
How much would be summer portfolio contributing to overall revenues?
Yeah, India business revenues.
Including Dermicool.
Yeah.
So that we have to calculate, Costa. We will come back to you. Okay?
Okay, sure. Thanks, sir.
Thank you.
Thank you. We have the next question from the line of Shirish Pardeshi from Centrum Capital. Please go ahead.
Hi, Mohanji. Rajeshji, I have a question for you. We have realized this MAT credit of 288 crore. Now, this is what we have accumulated over past 5 years.
So 230 crores out of 288 crores is of earlier years. Almost 55 crores is for current year.
And we have realized complete?
So we have accounted for this MAT credit this year, considering that our tax benefits in some of the units is for next 4 years now. And earlier there were views of the auditors that COVID scenario is there, so it is not certain by what time we will be able to utilize the MAT credit. And hence the accounting was not done, but this year, looking at the current situation, we have accounted for that.
So if I understand correctly, in the past till date, we have recognized, and this year we will further accumulate the MAT credit.
Right. From FY23 onwards, right.
And earlier you did mention about Kesh King amortization will get over by June.
Right.
And only then Dermicool will remain for the next 5 years.
No, we also have Creme 21 and a couple of these startups where in consolidation, the value of intangibles brands comes into picture. So some small amortization for these brands also would happen.
No, I was worried because you gave a number of 120 crore. That's what it doesn't add up.
So for Dermicool from next year onwards, almost 60 to 65 crores kind of amortization would happen, and the remaining 20 crores for Creme 21 and other smaller brands.
Okay. So it is roughly about 85 crore.
85 crores annually after Keski.
Sure. My second question is to Mohanji. Can you throw some light where we stand today on the pledge?
Pledge right now, Shirish, is at 34%.
And any plans that in medium term, last 1 year we've been saying that we will cut.
Plan still remains the same, Shirish, that we will bring it down. It will only happen post our, sale of our some assets that we are looking for.
But I think it's a good time.
Overall percentage has gone up because of the price correction.
Okay. And last question on male grooming. Last 1 year we have done a lot of things, and we have in fact relaunched the product last year. But the growth rate, what we are seeing, is that a distribution issue or category issue, or the new launches is not done? Or
there is no issue, Shirish. Please appreciate that all the schools, colleges, all the social events were not happening due to COVID the last 2 years. Okay. Now that everything is opening up, those marriages or school colleges, so this market will also see an upswing. We have seen good growth in the month of April as far as Fair and Handsome is concerned. And same is the trend for May also. So we are again, as I said, other than the pain portfolio and some healthcare challenges which grew due to COVID, other than that, all the categories are showing good signs of growth.
Exactly. The point what I was trying to say that over last 7 quarters, pain management has gone to a different level. And still this quarter also it has grown very well. So what is it that working for pain management and not working for male grooming? But you are saying largely because of the social event and out of home.
What has been working because of in pain management because of the COVID, Omicron jo aaya, last wave aaya, that's why pain management grew. And because there were no social events.
Okay.
So the male grooming, it's a discretionary range. It degrew.
Okay. My last question to Mr. Rao. Where we are in terms of Project Coach, because last call we said that from 4 states we are going to go to 10 states covering 85% of the sales. So now is that project is completely expanded, and what are the things which we are learning, and in terms of quantitative if you can say or suggest or help us to understand what's happening.
Yeah, sure. So we are well on track on our objectives of Coach. So we added last year itself. In fact, we've gone from and as we speak, we've gone from 6,000 substockist towns to 10,000. In total, we added last year 8,000 towns, which took our coverage now from 32,000 to 40. And as we speak, it's reached 42,000 in terms of our towns and coverage. We expect to add another 70,000 stores. We accrued in the system. We've kind of accrued 32,000 stores addition last year itself, and by this first half we will add that tally to 75,000 stores. The business also, all our KPIs in terms of our business size, our repeat purchases of all these new town additions, that's very healthy. It's upwards of 95%. And that's also because we've used an approach where we've identified potential towns, looked at our gaps, and appointed distributors in these towns, which has helped us actually get to a 95% accuracy. And that's a very large accuracy in terms of repeats when you embark on a town expansion agenda. Typically, you tend to hit 60% accuracies. That's because you use a potential-based approach, looking at a potential and the right kind of gap identification. We were able to deliver this kind of accuracy. It's doing very well, and we continue to do that. And even the next year agenda is similar. We will look at juicing out the towns that we've added in the last 9 months of last year, and we continue to expand in second half of this year, and we'll add another 8 to 10,000 villages.
And Shirish, let me also tell, as far as management is concerned, we have been very, very clear that despite of so many challenges, this inflation, low sales, rural not doing well, we haven't cut a single budget as far as period Khoj is concerned. Or, there is a clear mandate to Vinod that whether it is SAMT, even expansion in the chemist outlets, or any other opportunities that we have seen over the last 1 year, we will all implement now or going forward. There is no cut in the budgets.
Right. And just to add to that, we've increased our people on the ground by almost 50% in rural.
Right.
That's really amazing. So I hope these all things will add up in FY23.
Yeah.
Right.
Yes.
Mohanji, my last question to you. We have seen a new trend. Most of the FMCG companies are trying to revive the senior management. We did have Mr. Gulraj Bhatia and Mr. Rao on the board. But I think after Venkat, I've not seen a professional CEO in the company. So is there any thought or any comments you can offer? Because now you are sitting in the driver's seat.
So I can't comment on this series. If it happens, you will come to know. I think we have an excellent set of professionals working, and we are seeing the results of that. I think it's a good mix of professional with family. We have at the top, we are going very aggressive. Abnish also asked about our increase in advertising despite of pressure. So that stance we are also keeping for this year, because it's not a short-term strategy that we can always manage our margins if we cut our advertising. But that's not the strategy we are taking on. The targets to every CEO, whether it is international, healthcare or Vinod, is that we need to grow, and for that whatever budgets are needed, we will earmark those budgets. And same is to the brand teams also. Right now we don't have a definite plan to appoint a CEO. If it happens, you will come to know.
Sure. Thank you, Mohanji. Thank you, team, for answering all questions.
Thank you.
Thank you.
Thank you.
We have the next question from the line of Vishal Punmiya from Nirmal Bang Institute Equities. Please go ahead.
Yeah, thank you for the opportunity. Just one question on the inventory days. So this year as well, we can see that the inventory days have kind of increased, and it's been the case for the last 4-5 years. So if we can get some comments on the reason for that.
Vishal, it is primarily on account of summer building stock and also the inventory for Dermicool, which we acquired at the end of March.
Okay. And if for the last 5 years, is there anything specific that we can highlight in terms of the increase in inventory days?
No, it has nothing to do with any specific reason. Otherwise, it is only because of the increasing business of some of these brands, and also a couple of brands we have acquired, like Creme 21 also over the period. And some of the new launches have also come into our fold. Healthcare is there, so a lot of new launches. So looking at the portfolio, the inventory is with respect to that only.
Okay. And just lastly, what would be the rural-urban mix for us at the end of this fiscal year?
It is rural is still higher, almost 54-55% for us.
Okay, understood. Thank you.
Thank you.
Thank you. That was the last question. I now hand it over to the management for the closing comments.
We thank all the participants for joining us for our earnings call for Q4. And thank you, IIFL. Thank you, Percy, for arranging this call for us. Thank you.
Thank you, everyone.
On behalf of IIFL Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.